Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase, a podcast where we help you focus on market events that we believe truly matter. Now, inflation can be a significant thing, and before we get into the inflation reports of the day, I wanted to start with a small example of inflation's impact. If you're a movie buff, you know that Avatar is cited by many measures to be the highest grossing movie of all time, pulling in well over $2.8 billion in revenues after its release. However, if you look at movie revenues in inflation-adjusted terms, most reports note the highest grossing movie in history was 1939's Gone with the Wind. It's roughly $400 million nominal revenue at the time, translating into well over $3 billion in today's money. So something to think about as you pick a movie to watch this coming weekend. Now, there were a few major inflation reports yesterday, and I wanted to start in China. China's December consumer prices rose 1.5% year on year, but this was actually below what markets were expecting. Similarly, China's producer price for December, while still high at 10.3%, were also quite a bit below market expectations of over 11%. No surprise then that we saw a positive reaction from the equity markets, with the Shanghai Composite rising 0.8% and Hang Seng up a much stronger 2.8%. More interestingly though, the Hang Seng Technology Index jumped almost 5%. And in our view, all of this is because markets considered whether all of these lower than expected inflation numbers created greater room for policy to become a little more growth supportive. Now in the US, we had of course the 7% headline inflation number, and that was the highest since June 1982. We find it interesting though, the higher number was led by shelter and used car components. Now, used cars are a great example of an outcome of supply chain disruptions that we expect to ease later in 2022. Shelter, though, an example of broadening inflation pressures, which likely explains why we've got some of the recent strong messages from the Fed. For now, though, the key point was that inflation report pretty much met market expectations. And in our view, that explains why we got a relatively muted market reaction of slightly higher stocks, virtually unchanged bond yields, and a slightly weaker dollar. Now, if you pull these two inflation reports together, we believe they feed well into a near-term view to buy the dip. Yesterday, we'd spoken a little bit about how US bond yields were likely approaching a zone of technical resistance and how the US technology sector equities seem to be rebounding well within their uptrend from the 200-day moving average. The one thing I'd add today is that if you look at Asia ex-Japan equities too, from a technical lens, they seem to be holding up well at a relatively strong level of technical support, marked by a low first achieved in Q3 and the level we've been near since the end of 2021 in December. So that's something we'll be watching closely alongside the US dollar because, recall in our 2022 outlook, while we still view the US and Euro area as our main preferred regions, we still expect Asian equities to do well in absolute terms, especially if dollar strength takes a bit of a pause. Now, we're almost at the end of the week, and I want to point out two things just looking ahead for Friday. First is that we'll be watching how US Q4 earnings season kicks off, with a particular focus on any messaging on how earnings might normalize to a more modest pace in 2022. Second, of course, tomorrow Steve is back with his Through the Noise podcast, where he'll help you place some of what we discussed this week in a broader context. So keep an eye out for that podcast as well. That's it for today. If you enjoyed this podcast, please don't forget to rate and like it. Thank you very much for listening, and we wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.